Okay, good afternoon. Hello, everyone. My name is Nima Siar, Chief Sales Officer at FX Primus. I'm very honored to be hosting this panel today regarding COVID. Now what? Trading business amid volatility boom and economic gloom. I'm joined here with my esteemed panel, Ms. Natalia Hunik from Advanced Markets, Mr. David Bell from TradingView Inc., Vinay Trivedi from Flex Trade Systems, Drew Niv from Trader Tools, and last but not least, Evgeny Sorokin from Dev Experts. Now, initially, guys, when I got in the invitation to host this panel, I thought the topic, let's say, might have been a little played out or a little bit redundant. So having a little bit of thought, I told myself, hey, let's do something a little bit different. And having worked in the Forex industry for a long period of time, having many friends and colleagues, compatriots within the industry as well, I thought I would speak with all these guys and more or less compile a list of different challenges and issues that people are facing. The last thing that I wanted this panel to be is whereby we're just discussing, what happened with COVID and what do we expect. This is very redundant, very played out. So I've more or less compiled a list of different challenges, different issues that brokers are facing throughout the industry, all from different departments, et cetera. So prior to actually jumping into this, I thought it would be a great opportunity for each and every one of us to introduce ourselves, let the audience know what company you work for, what you specifically do, and more importantly, what would be, let's say, your flagship offering or what your company is best known for. So let's just jump right into it. We'll go with Ms. Natalia, Advanced Markets. Give us a little introduction, who you are, a little bit about your company, and where you're located as well.
Sure. Hi, everyone. My name is Natalia. I'm based in Boston. I'm a Chief Revenue Officer at Advanced Markets Group. We are an institutional liquidity provider and the prime of prime, servicing FX professional clients. I have been in the FX industry for over 12 years and held positions of progressive leadership for fintech and also FX brokerage companies. Here at Advanced Markets, we extend best-in-class institutional liquidity to FX market participants. We hold 2 licenses in the UK and in Australia.
Okay, awesome, Natalia, thank you. David, on to you.
Hi, I'm David Bell. I'm Business Director at TradingView UK. I do come from a trading background and I've used TradingView pretty much throughout my career. I think we are best placed in terms of being the best front end and the largest trading community in the planet, pretty much. We've got a depth of asset classes, depth of different indicators, things like financials for stocks. We're hooked up to FactSet. So really, for your average retail trader, it is the one-stop shop. It's the most kind of democratic way of accessing financial data.
That sounds interesting. I'm looking forward to understanding that a little better. On to you, Mr. Vinay, please.
Yeah, hi, this is Vinay. I've also come from trading background. So I started my career as an option trader in FX and then moved to technology space. I have been involved with Flex Trade as a global head of product and strategy for FX. And we have 2 flagship products. One is Flex Trader, which is a multi-asset EMS. And we have a product called Max Trader, which is what we use for FX market or OTC market. And that is where we service sell-side banks, broker-dealers, and hedge funds to achieve best execution, and also to service the downstream client with the variety of product channels, whether it's an API channel or third-party adapters or front-end GUIs or white label platform. So it's an end-to-end solution through which participants can service their downstream clients and win business.
Understood. You're based in Singapore, if I'm not mistaken?
Yeah, I'm based out of Singapore.
Okay, so past your bedtime, I imagine, but thanks for joining us. Next, we have Mr. Drew.
Hi, my name is Drew Niv. I started in FX in 1997. I founded FXCM in 1999. Most recently, and I was a CEO and founder of that. Most recently, I am currently the CEO of Trader Tools in the last year and a half. And Trader Tools today, legacy product was an aggregation, somewhat similar to FlexTrade, really an aggregation price distribution platform. Our new platform that we are releasing is more of an HFT in the box, a market making platform for institutions.
Got it. Very nice. Okay, and last but not least, Mr. Evgeny, please.
Hi, it's Evgeny Sorokin of DevExperts. I'm responsible for all the engineering happening at the company. DevExperts develops software for leading brokers, exchanges, and wealth management companies. We are best known for our multi-asset trading platforms, custom ones, complex software development projects, and market data delivery. We have many development centers around the globe. Our headquarters is in Germany. We have also Portugal, Russia, Turkey, and Bulgaria.
Very nice. Okay, thank you all. And again, thank you for joining us today. So what I thought, guys, is we're kind of in a unique situation here whereby at least 3 or 4 of you panelists are involved in liquidity providers on a certain level. With that being said, a big kind of challenge that I know that a lot of brokers have faced from, let's say, a retailer market making perspective was recently in regards to the Turkish Lira and pricing. So I'd like to get a kind of understanding from you guys. Let's say in my instance, or in my particular case, I was facing some complaints from clients whereby maybe pricing wasn't consistent, or whereby they couldn't even open or close any trades based on liquidity providers or banks not providing fees at this pricing. So if any of you would want to jump in who are actually more on the front end in regards to these things, from a LP perspective, why would the pricing for a product like this stop? And what kind of reassurance could you give a broker, let's say, that during times of high volatility, that our clients would actually have this product to be tradable? I think maybe, Drew, if you don't mind, please.
Yeah, so I think that, Turkcell is a little unique that we mostly service regional banks, and we service a whole bunch of Turkish banks. We deal with them direct and have price feeds from Turkish banks to other institutional clients. I can tell you kind of one sobering thing to say is this is not a G7 currency, as everybody knows. And with that, a lot of people in retail think just because there's a blinking light on the screen, it should look like euro in terms of consistency, and, it's always there. And that's just not the case. And the conundrum in emerging markets is that the people that have the most Turkish Lira inventory and are in best position to make a market in it 24 hours a day are Turkish banks, not global banks. And they are obviously technologically, and budget wise, not as able to do that all the time. But it's something that, Western banks, while have the technology, the large Western banks, everybody uses liquidity providers, have all the technology in the world, but they don't have the risk appetite in Turkish Lira, which can move, abnormal amounts. And I think that that's a big conundrum in the industry. And basically, really, unfortunately, there's no way around. You have to treat emerging market currencies, especially when there's times of turmoil like in Turkish Lira, as you need more than, like 5, 6, even 10 of the large G10, banks, and you need just a lot more diversity. And, I would suggest, obviously, interfacing directly with some Turkish banks. And I think this is something where, again, there's nothing foolproof, about Turkish Lira ever going to be, right? And all emerging markets, but it is going to be better than just relying on your traditional liquidity provider, which are at this stage pretty flawless when it comes to, 99.99% of the time in G7 currencies, but are not, clearly in EM, that's not going to be the case. So I would say just really, my experience, when we connect to brokers or, even other institutional clients who want Turkish Lira, we connect them to kind of your steady, normal liquidity providers, but also connect them to local banks that, actually have risk appetite and positions in that currency and are not going off of some hypothetical price.
Got it. And let's say, Natalia, in your case, you're working primarily on an institutional side. Did you find that, let's say, over the last 2 to 3 months, or even the last month, that you're seeing more trading on some of these more exotic currencies, or have you seen kind of a steady stream of volumes across the board?
Yes, absolutely. So we have been seeing quite a lot of demand for Turkish Lira. There's been, on the margin side, there's been some interest in carry trade on Turkish Lira. On the credit side of things, of course, I mean, on the ECNs and, other venues, there's been a considerable amount of Turkish Lira traded. But as Drew pointed out, it is not a G7 currency, so substantially less liquidity. However, we do have UBS as a prime broker, so we do have access to quite an extensive number of liquidity providers. So we did not, I mean, yes, it was a bit choppy. We did not lose access on that side, on the credit side of things. I mean, there were a few prime brokers that, stopped clearing Lira for obvious reasons. It is, as emerging market currency, we also take all sorts of precautions. If we do allow people traded on margin, of course, different trading conditions, different leverage, and things like that. I mean, the currency, as you've seen over the past few months, the type of volatility, it's to, there needs to be measures in place to protect the trader and the broker to avoid, any sorts of negative repercussions.
Yeah, understood. I mean, but then the question remains, okay, Turkish Lira, exotic currency, countries, and I guess some would say a little bit of a turmoil. Obviously, I believe the finance minister just resigned in the last couple of days, but then let's circle back to, let's say, March or April, when we were having the crash in the oil prices. So with that being said, from a liquidity side, were you guys obviously stopping feeding oil prices or oil rates to your brokers, or what was going on during the crash of the oil in your instances?
So I think FX industry largely escaped, the S&B type of consequence from the negative oil pricing, just because of the way that the instruments are structured, and the way that they're offered to the FX brokers. We did see one of the larger brokers here in the States taking a hit because they were offering the futures contract. But we do have three sources of pricing for the oil, and those liquidity providers actually, did not have any issues with the pricing in March. That's not to say that there was no one impacted. I'm sure there was a significant number of people and brokers impacted by the price turn and negative. And I was actually waiting and trying to see, but as you know, in the FX market, a lot of things kind of stay under the rug because a lot of companies are not public companies. So was there an impact? Probably. The extent of it, I think, is yet to be known.
Gotcha, understood. And now, David, to you, obviously when we spoke last week, you mentioned earlier part of the year, you guys saw a tremendous surge in daily applications or people subscribing to your service. Have those numbers, have they kind of stayed consistent throughout the year? Have they kind of tapered off? What was your biggest observation from, let's say, March or April, let's say, in comparison to last month or this month to date?
I mean, for UK specific, the Q2 figures were about double than they were on Q1. I think company-wide, we were adding about 23,000 accounts a day at one point for about a good month. I believe my colleague Piers Crosby, who's the general manager at TradingView, he was on a podcast and he quoted those figures. It has subsided slightly. However, we're still, seriously growing. And it's quite funny and unfortunate at the same time, because I think that the more that we lock down, the more that we actually are going to see more and more interest from people who might not have sports to bet on, might be really interested in the markets because of obviously volatility. You're seeing loads of headlines coming through just on standard media, which in normal times you might not actually see. And the general interest is just so high. Naturally, it's mainly amongst, the younger crowd at the moment. I think with the introduction of Robinhood, which is kind of a blessing and a curse at the same time for obvious reasons. But we're seeing such massive interest. And yes, it's tailed off slightly, but still it's really rocking.
I got it as well. And Evgeny, obviously when we spoke, you'd mentioned that, your company obviously a little different than the traditional technology fintech that I've got to come across, let's say. And you mentioned that ultimately you guys can make custom platforms or solutions for up and coming broker, or let's say an existing broker that is looking to kind of deviate from the traditional MT4, MT5 C trader as well. My question to you is, during these times where things have been a little uncertain, are you guys still finding the demand from, let's say, a broker level for your product offering, or are you finding that perhaps there is the demand and companies are simply looking for a way of differentiation, and perhaps this is where your company comes in to provide that solution?
So
Well, I
for
would
us,
say,
what we saw, sorry.
Vinay, go ahead.
Yeah. Yeah, so for us, what we saw something interesting, because we as a technology provider, we deal into like all the three spaces, which is like the sell side banks, and that is where, like Drew mentioned, our focus is also a lot more on the regional banks.
Yeah.
And then we deal with the broker dealer segment, and our typical kind of segment is those broker dealers who, as you mentioned, that want to kind of move. I would not say move away, or who, let's say, want to have something beyond, let's say, MT4 or MT5 or C-Trader kind of an offering, where they would like to do a lot more with the technology. So those are the broker kind of who kind of comes to us. And likewise, we equally operate in the hedge fund space. And what we saw something interesting is that during this COVID time, the demand from each space was different. So for a hedge fund client, which has typically a good infrastructure both in office and at home, because they're kind of well equipped, there the question was not that how I'm going to click my next trade. There the question was that how good is my liquidity and how good is my execution during this turbulent times. And that is where the kind of a question was that the typical traditional sweeping model, no, you have to be like a full amount, trading with one counterparty, more of relationship based trading. In fact, we saw a comeback of RFQs. RFQs people think is a dying kind of a methodology, but in this time actually people were doing more RFQs than streaming, because they think that if I just do an RFQ, I get a very kind of a firm quote. I don't want a scenario where I click a trade and it gets rejected and I'm done looking for next best quote which is not available. Now, obviously in Turkish Lira, the impact is bigger, but in GDN also impact is not, like, say, less significant. And likewise, when we saw, let's say, a bank space, their banks is very regimented, and they kind of pretty much work either in their office locations or they in the BCP location. So the question was that how important, or rather how well tested is your DR? So if I have to move to another location, am I ready to kind of service my client? And likewise, if I have to, let's say, because of certain lockdown, I have to tomorrow start working from home, am I ready for that? Like we saw a case in a regional bank where on Friday the lockdown was mentioned, and over the weekend they were thinking that how I'm going to, let's say, service my clients on Monday, because nobody has, let's say, that kind of an access from the home. So we basically kind of created a whole web offering for them to access everything from home. So that is where the demand was, the mobility, that how seamlessly I can access or actually give service my clients from home. And in broker dealer space, we saw that because the FX wall and the spreads were kind of wider, their own margin was kind of suffering. So which is why they were trying to compensate with the offering more products, which means the cross asset product, because obviously equity market was booming. We, in our equity space for flex trader, we saw massive influx in equity kind of a trading. So likewise, the broker dealers were thinking that how I can add more asset class to my kind of offering, so that at least I can offset anything which I'm not able to make more money on FX. So we saw different kind of a demand from the product, and it actually led to good opportunity for us, because now people realize that how important it is to stay digital in this world.
Understood. And Evgeny, onto you. It's a similar question in the sense, obviously you guys are kind of the more untraditional type of fintech, let's say. How would you say your demand within your offering and your business model has changed, or has it kind of subsided as brokers are kind of a little seeing a little kind of a slowdown in terms of revenues and volumes over these last few months?
Right. So we haven't seen the slowdowns, so to speak. In the OTC space, many brokers, they run hybrid book FX and crypto CFDs, and that kind of more than compensates the reduction in the FX. In our US ARM, volumes are definitely far from the highs of Q1 and Q2, but the markets are still more active than it was before the first lockdown. Well, speaking of the changes in the demand, we see that more and more brokers want to go multi-asset, offering multiple asset classes on the same trading platform. others are looking to ways to increase their lifetime value by improving trading experience, like existing clients experience, by adding new interfaces, new channels, some quality analytics into the platform, new ways to prompt the people to trade. And the majority of them, they face an issue of scaling up, and they come to us with the scale up requests to upgrade their existing OMSs to get ready for the growing volumes. So I wouldn't say we see any slowdowns.
Got it. And you mentioned a key term, let's say, Evgeny, that I wanted all of us to kind of speak about, and that's in relation to client lifetime value. So speaking with a lot of colleagues, et cetera, everybody's mentioned that obviously everybody saw a huge jump in volumes. Okay, that's nothing new. But I'm finding, speaking with a lot of my colleagues, and the whole concept of analytics for the traders, and basically giving the broker information or data on client trading behavior that is actionable. Not just telling me, okay, 80% of my traders are buying USD, or the average stop loss is at X rate, but actually actionable items, so we can more or less either segment our database or have targeted information to these specific clients based on what they trade or how they trade, or informing them of missed opportunities, let's say. I believe within all of your organizations, you do have some sort of tools or analytics available to help a broker like myself to overcome these challenges. So ultimately, right now, we want to get our clients trading to the volume that they were maybe 3-4 months ago, 6 months ago, which might not be easy to do from the client to do themselves, but it requires the broker to take action or to have access to information. So whoever would want to jump in, but I know probably David, for you, might be the easiest in terms of how you would be able to help me as a broker to increase my lifetime value or increase the average volume per trader. What kind of unique tools that you guys have that could help me as a broker to overcome this challenge?
Well, I think primarily, and speaking, myself as a trader as well, one of the things that TradingView has been doing over the last year is allowing brokers to integrate into the platform. What we have noticed, and what I have noticed from speaking with various different traders, is that a lot of people tend to have their execution platform on one screen and trading open on the other. So they're looking at TradingView already, doing all of their charting, looking at all of the different tools that we have, but then only clicking buy or sell on their MT4 trade or C trader or something, another one of their platforms. So I think one of the big things for us at the moment is to really push and ensure that the best brokers, the most regulated brokers, and the brokers that people deem to be good are integrated onto the platform. And from that, we allow live users to then go and rate each broker. Okay, so it's totally impartial. It's great exposure for each broker because you're being shown to say 14 million users a month, and also the user is getting the experience of being able to trade via TradingView, via our front end. And then off of that, obviously, we have alternative data sets as well on different users, etc., which we dive into as a company to understand our users more. And we can go pretty deep with it, which is fantastic.
Got it. So, but let's say from a broker perspective, David, I mean, how would I have the reassurance, let's say, if I'm sending clients to use your services, that maybe I'm not going to be competing with another broker, perhaps via some advertising or anything like this? So you're telling me that everything is fully neutral. There's not going to be any interstitials or banners of other brokers and these type of things promoting their services.
Yeah, so we do advertising naturally, and that is on a native basis. So it's built into the platform, so it's not intrusive ads or anything like that. If you are connected with a broker, though, then naturally you're not going to be hitting adverts from other brokers. So we do like to keep it in the broker's interest, naturally, for their clients to remain with them. It only makes sense for the relationship to work in that way.
Got it. I know, Natalia, at Advanced Markets, you guys have some sort of online reporting, and this is, I believe, for on a broker level. What would that online, quote unquote, reporting entail from my end that would benefit me?
Yes, absolutely. I mean, what we provide to the clients is we actually expanding that offering right now, and we are providing, of course, all sorts of intel post-transaction analysis, as well as in-depth reporting on all the breakdowns of transactions, exposure, and things like that. In terms of expanding, I mean, we've been actually looking at the various tools on platform level and also from the third-party vendors on TCA analysis that we could probably also pass on to our customers down the line, but also use for ourselves and more enhanced post-trade analysis tools. To help us to tailor, and we are 100% DMA brokers, so we're looking, from an internal point of view, we're looking for tools to help us, create a more compelling offering and more customizable offering depending on the client profile. But of course, from the TCA perspective, we're also looking at the tools and building some in-house and using some of the technology from the third parties to provide this type of analysis to our broker and not only broker clients as well.
Got it. Okay. And Drew, obviously, with your vast experience on the retail side, with obviously your new company that you founded, what type of, let's say, analytics or trading behavior data or information are you able to identify and pass on to the broker?
So we have a pretty extensive suite of of analytics that you could use. The clients can obviously use, and I think we obviously shape some of it already kind of predefined for clients, and clients can take some other stuff and play with it also. And it's obviously a little bit, we can customize that a little bit different per client depending on needs. And more, I think the most important thing for being in retail FX for 20 years, I can tell you the following. Before I sort of got into the institutional business, is that there's a dichotomy in retail that if you look at like the instruments, the behaviors that extend client life are inherently, right, unprofitable for most brokers.
Sure.
Right? That's just, one of those things, right? And that's not just for people who are bucketing trades, which is the majority, but it is also that way from perspective. I'll give you just a specific example. P&L tends to be higher in slow-moving in currencies that are less volatile for end user clients, yeah. Right? And obviously, that even for a DMA broker, that would generate less transactions because the traders are attracted to volatility. You have, for example, people, because of carry trades, people do better in carry trades, but that means they trade less. So all those Turkish Lira may be a little exception because it moves a lot, but a lot of those EM currencies, not a large percentage of retail brokers, retail users trade those, but those where P&L tends to be higher for the end user client, right? So a lot of there's inherent conflicts here in many places, and it's really about kind of bridging that middle. So what we do, our new product is really meant to, today people have the A book way or the B book way, and this is really to say there's a way to hedge your risk, well, sort of like an A book, because this is a trades that you do not want to go against, right? Because overall, they're not going to, lose in the same way that the average B book will. But you can monetize them differently, being your own market maker, and that's the software we're, going to be selling. And I think that that's something where, ability, instead of today in an A book way, your client pays you the spread, you pay a spread to the liquidity provider. There is a way, obviously, to earn spreads on both sides as a maker on institutional business. While you're not going to be able to do that on 100% of transactions, there is, a way to juice that. And specifically for EM currencies, for gold, for things where the spreads are wider and it's a lot more juicier to be a maker. And again, this is not being the traditional what retail FX brokers being a maker, essentially they consider that bucketing trades, and that's not what I'm talking about, right? Yeah. So I think that that's something where there is a thing here where brokers are going to have to get more creative. And if you look at extending life, it really is all about doing, the trades that are, I give you in metals. So gold is a B book special. All the brokers love gold because it B books properly, really well. Silver, quite the opposite, right? It's a one-way instrument. Everybody hates to bucket it, but P&L for clients is awesome, right? And so on and so on. There's a million examples like this, unfortunately. And they're really, you know, sometimes you spend 20 years in one spot and you just can't think of outside of yourself, right? And so when I left FXCM and I got into Trader Tools, really sort of how to, you know, what could we do? Trader Tools mostly serves really regional banks that sell software. And we started selling to agency brokers, but really now there's something, a new product is meant for, even though it's still mostly meant for regional banks, it's something that retail brokers can use as well. And a lot of this is really in the retail brokers kind of world, is really to monetize better and be more consistent, right? To your topic about, you know, how do you be more consistent about offering Turkish Lira liquidity, is you have to intervene and do it. Yeah. Right. And that's something that, you know, I think is something that is really very necessary today, because things are heading that way, right? And I think that that's especially right as leverage decreases in certain jurisdictions, that kind of turns a lot more instruments into that sort of higher P&L thing, in single shares, right, and all of those type of things. So I think what people are going to see is sort of a movement, and you're seeing it now. I think it's why you're seeing a lot of people reporting kind of slowdown P&L, because currencies are more range bound, right? And, you know, the indices have kind of calmed down, and where you have the movement is, you know, esoteric currencies, single stocks, right? Things that traditionally are not B-book money losers, or not guaranteed B-book money losers like they were in some in the traditional mainstays. And that's kind of where it's tough to push clients that way. I mean, at FXCM, we tried everything we could to push clients, you know, to, I give example, trade during Asian hours, because, you know, the market doesn't move that much, and all the statistics say when the market doesn't break out, that's when all the range trading retail guys, that's when they make money. And yet, you know, like 3% of clients listen, 97% think they know better. So no matter what we push, we're not going to change client behavior on a grand scale. But on a margins, there's absolutely things you can do, especially if you make the carry trade, especially as interest rates go down across the world, you make the carry trade more attractive. That's one very specific way to do that. I don't think every broker can do it, because it's what Natalia was saying. When you have to go to someone like, you know, advanced markets, you have to put up more margin, you know, to do those trades. But I think that that's for people who have that capital. This is something that I would definitely say.
Just selling the float to Citadel as well.
Yeah, I just wanted to kind of play off what Drew just said about the margin squeeze. I think it's been just a problem in the industry. It's like a strategic risk for any FX brokerage for a long time. So it's good to see that there are, and honestly, like the existing solutions that are out there, I think, you know, do not address the need to, you know, find the new ways to squeeze the margin out of the business. I mean, everyone is kind of a volatility farmer, especially after 2019. So there was a bit of a, you know, of course, in the great lockdown, you know, we saw like 30-40% increase in volume, which was great, but, you know, it proved to be short-lived. So again, everyone waits for volatility. And meanwhile, you know, brokers really need to be looking the ways to diversify, and they've been trying to a certain extent, but also like find ways to generate margin, or, you know, make attempts to make the trade and behavior to generate more margin, which is really not an easy task, because it's kind of very commoditized. And if you look at differentiation in the FX brokerage industry, I mean, there's really not much. I mean, the default, everyone who comes in is, you know, MT54, you know, default B-book operation. I mean, it's a tough business at this point, with low volatility and kind of a big saturation, and, you know, regulatory pressure that keeps on increasing.
Well, I fully support some of these challenges now, because end of the day, what we may see is just a massive purge in the industry. A lot of these brokers, again, these cookie cutter ones coming in with MT5, a limited marketing budget, and think that they can take some market share. It's more or less unlikely. But with that being said, one thing that I do notice with a lot of brokers is that when it comes to execution and these type of things with the actual trading, this is something that a lot of brokers don't discuss or that they don't address. And the way I look at it is what we might have seen in, let's say, the volatility boom earlier in the year. This could have been amateur traders, beginner traders, etc. But the professional traders will always continue to trade. And with that being said, I think about ways that, let's say, as a broker, we can maybe have differentiation with our execution or address that elephant in the room. Will my orders be executed on time? Will there be slippage, etc.? And I know, Vinay, one thing that you guys, one of your taglines, let's say, from your company, mentioned about broker neutral execution. So how does that come into play, and how would, let's say, potential traders see that as a unique selling point or a unique point as to why would they want to work with a specific broker?
Yeah, I mean, our company Genesis is basically broker neutral, and probably if you can extend it is basically the algo trading. So what we have been doing in all the asset classes, starting with equities and in FX also for almost 16-17 years, is having a EMS system which allows you to access as much as liquidity as possible. And second is that everything is bespoke, so everything is a one-to-one connection. So the whole idea of recycling the liquidity, or I have a liquidity but it's a liquidity mirage, all those things can be handled in a way, because every installation is a custom installation, and every connection is a one-to-one connection. And that is where, if you are an A-book broker, it allows you to have 4, 5, 7 different streams from the same counterparty to decide that, okay, this is the classification A, B, and C, and how I'm going to, let's say, plug the right liquidity so that I have the right way of kind of offsetting my risk. And likewise, if you're a B-book broker, then we complement the solution by giving you an ability to have a sophisticated pricing engine. And that is where, because we have been servicing a lot of hedge fund clients and the regional banks with their pricing engine kind of a requirement, we have the toolkit which we can extrapolate to broker dealer space also, and give them that sort of ability to literally curate the liquidity and create a pricing keeping the end client in mind. And now if you are a B-book broker, for example, the word B-book broker looks very off, but the idea is that if you are, let's say, running a warehousing engine, you have all the right insights to decide which is the right client for me to warehouse, what time, what size, which currency. So there's a bunch of rules which are there in the engine where you can classify, and you almost like a predefine everything. And then you have those kind of a volatility switches where you can say, okay, let me toggle between a volatile market to highly volatile market and change my settings quite fast, so that I have a time to react basically. And likewise, when you're hedging also, then you are offsetting the risk basically. So in that case, you have a bunch of rules which you can define, that what is my appetite, up to what time, up to what size, up to what PNL I'm going to, let's say, kind of hold the position before I start offloading that risk. And this is backed by the analytics tool. So analytics tools throws these kind of different scenarios and different values to you, that this is a profitable client, this is not a profitable client, you should change your basically strategy from B book to A book, or let's say you have to change the different stream. So we also analyze profitability decay, that for every trade, what has been profitability decay. So let's say from mid market, I have been making $100, for example, which is not kind of possible these days, let's say $10. Then basically in how many kind of millisecond to second, my $10 is going away. So which means up to what stage should I hold the position, or whether this is a client to hold a position or not. So a lot of insights we throw to make sure that as a broker, you have right kind of, I would say, insights and maybe actionable insights, so that I can kind of manage my risk properly.
Got it. So if anything, I could say it's almost like an automated risk manager for me.
It is an automated risk manager, because with a lot of intelligence coming from the banking space. And I think in the starting, Drew kind of mentioned that how regional banks, have to be enabled. So what we kind of play uniquely on that, how you curate the liquidity, how you price the client, and if you are managing the book, then how best you should kind of run the risk. So everything is in a controlled environment. I mean, obviously you need a manual dealer to intervene whenever, let's say, you have kind of those kind of a volatility event. But the idea is that go as much as automated, as much as calculated as you could.
Got it. Interesting. Very interesting, actually. And again, obviously, you mentioned that as a broker, I could come to you and say, okay, I want to focus my offering to maybe options, something that's maybe a little more of an investment tool as opposed to, let's say, traditional forex. So hypothetically, with your product, if you would build me a custom, let's say, options platform, am I able to integrate with other third-party softwares, or let's say Vinay's risk management tool as an example, or you guys, everything that you offer can be proprietary with your company?
No, it can be either way. We are probably most flexible vendor on the market. We can license you like either the blocks, and you can even transfer the development and support services under your roof and carry on with what we have built for you. So yes, bottom line, we can integrate with anything, or you can buy like a combination and bundle of software solutions and services from us.
What I like about, at least what we discussed was how just everything's fully customizable to the broker needs. Now, from your experience, obviously you're looking after all the developers, et cetera. What are some kind of interesting kind of trends or some things, pivots that let's say that you would see from other brokers in relation to some of the custom softwares that you've done for them?
Well, to be honest, every project is a unique one, so I can't define any specific trend. Every project has a certain reason. Somebody wants to increase their valuation. Somebody wants to launch a product with a short time to market, and because of that, but they are not happy with the off-the-shelf products, and because of that, they can't go with the existing vendors, so they come to us, and they say that it's nearly done, but they want like facelifting here or integration there, and like a fully blown custom solution next to it, and we can cook this cocktail for them.
Okay, interesting. And actually, another thing that I was reading, Drew, and this is in relation to you and your organization. You mentioned, or it mentioned when doing some research about customized LP solution. So as a broker, I can kind of create my own liquidity provider, or I can create my own pricing feed. How does this work? Because this is something I believe in terms of differentiation and more or less pivoting the traditional business strategy of a broker. I think this is something that would be of interest for many brokers. Can you give us a little more insights into that?
Sure. And what we did was we took an HFT, right, and we put it inside of Trader Tools. Okay. So think of an HFT minus the speed. So if you're going to try to compete with, Jump or Virtu, well, that's not going to happen. But what it will allow you to do is say, great example is Turkish Lira, right? Is your two choices today. You're going to bucket that trade, which is dangerous or is really seriously profitable, right? Or you can A-book that trade, which is a very large, so that's not risky, but from a, normal perspective, but you're at the mercy of liquidity providers and more important for your client experience. And more importantly, you're giving up 90% of the juice, right? Which is why kind of people wrestle with that question. What we do is allow you to add, and this does not replace completely, right? This is just an addition, allow you to add essentially yourself as a market maker, not in a traditional, like I said, B-book way, and allow you to customize, okay, take certain trades, certain clients, depending on your assessment of what you want to do in certain currencies, and not just say, okay, this client decays in the next 10 seconds, this trade goes from profitable to not profitable, so I want to get out within 10 seconds, but try to fish, right, for a, just as an HFT would, try to put out bids and offers out there on ECNs and try to earn the spread on, to hedge your way. So you earn a spread from your client and earn a spread on the hedge instead of paying for one, right? Okay. Also, and a much more intelligent tool of how, when to hedge passively, when to hit, in what order. Like Vinay was saying, you don't want machine gun people. You want to know, okay, these banks, I have to trade with them, not more than twice a second, right? Or else their feed kind of, starts to widen out. So you kind of regulate who you hit. And so there's a lot of technical, enormous amount of customizability, and basically what a market maker would have internally, right? So if you look at HFT market makers, they make a market to somebody, and then they go out there and through a combination of inventory, how long they hold it, combination of passive trades, you know, and aggressive trades, right? They basically get out of that exposure. And this, we give you that solution. Now, that solution is, again, is not going to make you a high frequency market maker from a perspective of you're not going to go out there and, you know, take market share of, you know, on EBS and those kind of places, but it allows you to be a two-way market maker for your clients, but a one-way market maker, right, for in the institutional business, right, to hedge your exposure, you know, there too, and just more intelligently do all that stuff. And in currency pairs where the spreads are wide, there's a massive difference in P&L in earning the spread versus paying the spread, right? You don't have to bucket a currency when the spread is super wide, and you can sort of do that. And that's what I was saying, where if you look at behaviors where, you know, brokers are saying, if I offer people to trade, you know, normal times, Hong Kong dollar, it's the most boring currency. How am I ever going to make money in this thing, right? Always range trades, don't ever lose. And if I A-book this thing, I'm going to make pittance on every trade. It doesn't cover my marketing. That's a dilemma for everybody, right? So we essentially give you the ability to go in the middle and say, no, these are wider spread currencies. You'll be able to make the spread plus on stuff like this, right? And I think that that's a big deal. I would say customization is all the way from technical stuff to just practical advice out of experience, right? And this is kind of some of the stuff I brought myself, is really the issue of everybody sort of knows, you know, how many liquidity providers do you really need in Europe, right? As Vinay was saying, right, the more you spread that business around, the less loyal they are to you when time comes, right? But in Turkish Lira, you need a lot, because, you know, there's like the old Chris Rock joke, people have not YouTube it, okay, is there is when you walk out the front door, nobody cares about you, and liquidity providers top of that list of don't care about you, right? Or not your parents, right? No matter how loyal you are to them, no matter how many trades how big of a customer you are, their self-interest matters more, and everybody thinks that way, right? And I think that in things where the risk could be severe, right? Oil, great example, is just, you know, to ensure that you have a better experience. But in things that are pretty steady, I think people make the mistake of having too many. And I think that that's, you know, this is partially simple as that, and partially it's, you know, a very complicated thing. But we sit there, we have an HFT quant on staff, used to have his own HFT, right? So we customize all of this, you know, for the client, exactly looking at his data, what he needs to do, and, you know, how much he can internalize and how much he can, you know, do passively and earn a spread, and what he can't, and, you know, you kind of tweak that for people. And I think that that's allows people to not just make markets off of things that are not traditionally been good for brokers, but also to, you know, you can prop trade against your inventory. You can do lots of things that in normal times that are slow times. You can increase revenue. And I think these are things that, you know, again, kind of that's what we are trying to do, something a little bit different than what most people, you know, are trying to sell. And a lot of this is because, you know, the solutions are already there in the market for the traditional stuff are pretty good solutions, you know, and a lot of it is deploying it. We get greedy, right? When we run a broker about, oh, you know, we think we get pride and all this stuff about, you know, how many relationships we have and which bank and all this stuff. And a lot of times that doesn't really suit, you know, very well. Or sometimes we're too gullible and trusting, and we have only one PB or what, you know, one of those kind of things. And that's
doesn't it seem like right now would be the time, let's say for those of you that have providing liquidity is one of your offerings, wouldn't this be the best time to be approaching different brokers for new business, more or less with so many examples that have happened this year within pricing and issues, et cetera, US elections and whatnot? Wouldn't this be the right time to find new brokers? And if you're going to find new brokers to provide the service to, what really would stand out for you guys in terms of your product offerings of why, let's say, I would want to take on an additional LP or stop using one and moving to you guys? Maybe Natalia with advanced markets.
Oh, are you asking about the liquidity side of things? Okay.
Yeah, exactly.
Yes, absolutely. So I think post SNB, a lot of a lot of businesses realize that relationship does matter, and there's been a shift towards a disclosed trading, as we've seen in multiple reports, and all this kind of black swan events, demonstrated that access to credit is shrinking, and a lot of, on the retail side of things, a lot of brokers have been removed even further from the original sources of liquidity. So to Vinay's point, I mean, there's a lot of recycling going on, and there's a lot of market players disguising themselves as providers of liquidity, as prime of primes, when they're really not. So sometimes we have brokers coming in and looking at our liquidity ladder, and we or post trade execution, where we disclose the counterparty name, and we show the real banks that executed the trades. They're really shocked because they've never seen anything like that before, because of the kind of the nature of the retail FX business. And as I mentioned before, I mean, the default is B-book, and then when you need to hedge something, it's kind of an ad hoc operation. You just have people coming in and be like, well, open an account in one day, I need to hedge oil. But at the end of the day, I think a relationship does matter, and we work with a lot of professional clients. And to your point, Nima, earlier about professional clients, yes, I mean, the lifetime value is a much greater than the retail customer. There's more clients who are more informed about the industry, clients who are looking into things that retail clients do not look into, like the quality of your balance sheet, the executive team, the way you handle execution. And they ask a lot of questions about execution, how you handle execution, and what are the defining criteria. And they are asking to customize liquidity. And I feel like brokers kind of been ignoring that aspect for some time, and the retail brokers, again, we've seen a lot of this, like over the crisis, and there's like oil crisis or something like that. You always have like a surge of people who are coming over and they want an account open yesterday because they need to hedge something urgently. And I feel like strategically that's probably not the best thing to do. I mean, it is a business. Things can get more volatile in very quickly, as we observe, in the markets, and you always need to be prepared and have your accounts opened and have relationship established, and being able to tap into that relationship when you need to. And especially, I mean, what we discussed earlier about the Turkish Lira, you absolutely need to, if you're offering that to your customers, retail customers, you absolutely need to have those arrangements in place, prior to any abnormalities happening in the market.
Sure. And I didn't realize actually, guys, we're running a little tight on time, but I wanted to just speak with David real quick. Obviously, out of all of us, you're the one who's obviously most in touch with front-facing clients, the retail clients. With that being said, some of the tools that you have, let's say for me as a broker perspective, what type of tools, or let's say information, or let's say even trading ideas that TradingView is really known for, that myself as a broker would want to pass on to the clients in order to give them more information, to help them to be more informed, and ultimately make better trading decisions?
Well, I think actually to flip that, one of the best things that I find TradingView to be is that it can act as a direct log of people's own ideas, and it can hold them accountable. Okay. If you were to publish a public idea on TradingView, you can't delete that. You can make it private, but it's still there, and I think accountability amongst retail traders is an absolute must. That's definitely one benefit that's maybe not directly related to the broker themselves, but stemming off that, brokers are actually able to, do their own streams, push their own ideas on TradingView, their own trading ideas, obviously within the realms of regulatory limits. But I think it can act as a great content push to a really, really massive audience, and a massive audience that is active in the market, not just, you can jump onto Forex Factory or, FX Street, and you can have quite a passive audience. These guys are actively looking at the market, otherwise they wouldn't be on the website at the time,
Okay, cool. Guys, unfortunately, we're way past our time, and I barely feel like we even scratched the surface. So we are going to have to wrap this up. But for those listeners who are out there, you can leave any questions or comments for any of our panelists on the side. And we're going to have to sign off. This is the first Finance Magnets virtual summit. I hope next year we can actually do this live and in person and see everybody. But it is what it is, and we're managing the best we can. Before we sign off, any comments, questions from the panelists? You guys have anything to say, or see you next year? Okay, I'll take that as a see you next year, hopefully. Again, thank you guys for your time. I know how busy you are. I wish we could have discussed some things in a little more detail, but it is what it is. And just thank you again for the time, and hope to see you soon. Thank you.
Thank you.
Cheers.
Thank you.
Bye, guys. Have a lovely day.
Thank you, guys.
You too. Bye-bye.
Thank you.